Welcome to Financial Sense. Today we're talking about how you choose your bank if you're a business owner. Stay tuned. You're listening to Financial Sense, Arizona's financial podcast that gives you insights that you could only get from a friend in the business. Recorded and brought to you by National Bank of Arizona, the only bank you need. Hello, I'm your host, Brent Cannon. I'm the Executive Vice President and Director of Community Bank here at National Bank of Arizona. Thanks so much for joining us today. Today, we're talking about how to choose a bank if you're a business owner. We have as our guest, Tom Coppy. Tom, welcome.
Hi, Brent. Great to be here.
Yeah. Tom's been with the bank, I think, 23
years,
you were
yeah.
saying. Is our Senior Vice President and Regional Commercial Manager out in the East Valley.
That's correct.
Of the Phoenix Metropolis.
Yeah.
So let's start kind of at the very top here. What do business owners have to choose from? Regional banks versus big banks versus small banks, community banks, and then, of course, credit unions. Kind of talk about the pros and cons of those main category banks.
No, it's a great question. Every industry has its different niches and the way they're designed, and banking's no different. So what we typically see with the smaller banks, often called community banks,
Yep.
They may have one branch or a handful of branches. I would say they're typically known for the relationship. You walk into the branch and they know you by name,
Right.
And kind of that old school traditional banking,
Right.
which is great.
Right.
Sometimes some of their limitations might just be the lack of size. Certainly if your business grows, you could outgrow a community bank. Sometimes the technology may not be there. Technology is expensive. And so for some of these small banks to have all the products and services that a growing business is going to need, that can be a challenge. That's how I would characterize some of the smaller community banks. The big banks, well, boy, they're known for, they got plenty of locations. They've got every product you need. You're not going to outgrow them. So they've got all those going for them. Sometimes what we hear from business owners, if they maybe have come to us from a big bank, is maybe the lack of relationship.
Right.
A lot of 1-800 numbers to call to solve a problem.
Yep.
Perhaps some turnover and who their banker is. Do they know who their banker is?
Right.
And so that relationship aspect may not always be as tight with some of the larger institutions.
Right.
Then you have regional banks or mid-sized banks, and that's where National Bank of Arizona would fit in. And we hope and we think that we fit in comfortably between the two. So we're part of Zions. Zions is a $90 billion organization, so we've got strength and stability.
Right.
We have the ability to invest in technology and treasury management services.
Right.
It'd be pretty rare for a company in this town to outgrow what we can provide for them.
Right.
So we can provide all those things that a big bank can have. However, the way we're organized, we're organized much more like a community bank.
Right.
So there's a collection of banks within Zions,
Right.
and National Bank of Arizona being one of them. Right? Our focus is building long-term relationships with business and their business owners. Our customers, I think they feel it. It provides a difference for them. And we just think it's a better way to do banking.
So, Tom, I'd like to get your thoughts on credit unions. Pros, cons. What are your thoughts? You're a veteran in the industry. You've seen credit unions kind of evolve.
I would almost put credit unions in the category of a small bank in terms of how they enter the market or how they compete in the market.
Right.
Certainly some credit unions can get pretty big in size.
Sure.
But in terms of, they're going to be known for that relationship, I think. Good for them.
Yeah.
When it comes to product set and breadth and depth and being able to grow with a business customer, sometimes we see that can be a limitation for them. They may or may not have all the treasury services, and they may or may not be able to grow with a company as they really, hit stride in their growth cycle.
Yeah, I think that's a really good point. There's a level of development that banks go through, and credit unions and many smaller community banks, recently formed or recently entering into new lines of business, commercial and business being an example. There's a learning curve.
Yeah. They just maybe don't have the history and the experience in the commercial space as much as many of the banks do.
Right.
Yeah.
I think that's an incredible summary and really some great thoughts. You said a couple words that are they're in most of the financial articles these days. Financial stability.
Yeah.
When it comes to banks and banking, and I'd like to get your perspective on that because it is such a relevant current event.
Sure.
What should business owners think about when they, ask the question, is my bank financially stable?
I think a business owner can start with just what's their reputation?
Right.
What do they know about the bank?
Right.
It's a starting place, right?
Right.
Do I know this bank? Have they been in this community
Right.
for a while?
Right.
Do I know other business owners that bank there? What do they have to say about them? But obviously, if they want to do some due diligence, they can certainly go deeper.
Right.
A lot of banks are publicly owned, and we would fall in that category. So you
Right.
can do some research. You can look up the ticker symbol, see
Right.
what the analysts are saying if you want
Right.
to go that route.
Right.
Private banks may be a little bit harder to get some of that information. You can certainly, if you really want to dig in, get on the regulatory websites and see if there's anything there. But I really think it comes down to understanding who that bank is,
Right.
what their markets are.
Right.
There was obviously a lot in the news about Silicon Valley Bank, and they
Sure.
were a very unique bank, very unique business niche that they were in.
Right.
And so you want a bank that has strength and stability, has some size to it,
Right.
and is diversified across their industries, across their geographies.
Right.
And I think that's really where a business owner should be focused.
I think those are some really good points. Also as you're talking, I'm thinking about deposits. I think it's a good practice for the average customer, business or consumer, to understand FDIC insurance premiums, how
Sure.
it works.
Yeah.
I think that's generally kind of an afterthought for most businesses and most people. But I think this is a good reminder. We all need to understand how FDIC insurance works.
Right.
But also, going back to kind of the banks, and by the way, this is a new phenomenon. When you go back to the Great Recession, that was really an asset issue. Those were problem loans that were causing banks
Right.
heartburn.
Yeah.
Right now, banks are kind of having some liquidity concerns regarding their bond portfolio and deposits. And
Sure.
you said a couple of things. I think a diversified deposit base goes a long, long ways, which, by the way, is a strength of regional banks.
You bet. Absolutely.
We have many small depositors over kind of a broad market, and that's a strength.
You want that diversification.
Right.
Yeah.
So I think, and then if I'm a small business, just pay attention to current events.
Yeah.
What are banks doing? What's the news saying? Are banks laying people off? Are they are they doing these kind of things?
Sure.
That would, if you don't want to get into the investment reports
Yeah.
or into the investor, comments, there's some general comments that you can just kind of pay attention
Yeah.
to.
What are
out
those
in the press.
indicators that are out there in the marketplace?
Right,
Yeah.
exactly. So, Tom, in your mind, what accounts should business owners have?
Well, of course, any business is the foundation will start with that basic checking account or multiple checking accounts, savings account, and online banking.
Right.
You got to start there,
Right.
right? But as a business grows, obviously their needs change, the sophistication level is going to change, and so the treasury management services that a bank can provide are going to be really critical for a growing business. So there's online banking, but then there's online banking that has some horsepower behind it.
Right.
You might want to give one employee authorization to do certain transactions, but not other transactions.
Right.
Pulling customized reports. So you can get into the weeds on this, but it's really important that your bank has a really well-developed online platform. From that, you're going to get into some other things like ACH services. You're going to get into some fraud.
What's ACH stand for?
Automated clearinghouse.
Okay.
So that's a way to send money electronically, but a lot cheaper than sending wires.
Okay.
So businesses, you can send or receive money through the ACH network. Fraud prevention is huge in today's world.
Right.
As you know, Brent, we're
Right.
seeing so much fraud out there.
Right.
And there are certain products that can help limit the risk exposure for a business that they have to fraud. From there, you're going to move into maybe credit products, right? So most businesses, if they've been around for a few years and they're growing, they're probably going to want some sort of a revolving line of credit for some working capital backup. And then from there, it's really going to be just a matter of their business, what their needs are on the credit side.
Right.
They may need some equipment finance. They may need commercial real estate finance. They may want an SBA loan, an acquisition loan. So there's a different variety of financing tools we have, and it's just really dependent on that business and having them being able to take advantage of growth opportunity. And of course, that's what we look to do is work with our customers, help them figure out what is the right debt product and how much debt is going to be appropriate and healthy for their company and their balance sheet.
Yeah, those are really good points. When I think about this, if your bank's not providing some consultation, and you know that old adage, you don't know what you don't know.
Sure.
If they're not kind of filling that gap for you as a business owner, that might be a good cue for you to maybe I should look for another bank.
Yeah.
That's
We try not to think of ourselves as just merely order takers.
exactly
Right? We listen to our customers, but we want to work with them. We want
Right.
to understand what their goals are,
Right.
and try to figure out a pathway that helps them meet those goals.
Right. So, Tom, what I heard you say is a business owner needs, of course, their operating or checking account. They need to make sure that they have the proper credit side loans, whether it be a line of credit or an equipment loan or line, perhaps ACH product or automated clearinghouse where they can move money fairly seamlessly throughout their vendors. Those are kind of the important key core products, as well as some fraud prevention products, which treasury management departments offer. But at the end of the day, those are kind of your core base products that you get at a bank. That's what business owners kind of should think about.
That's right. I would agree.
Okay.
Yep. Well said.
So, Tom, not all businesses are at the same point in the life cycle. We have, brand new businesses, and then of course we have really well-established businesses. So, why don't you kind of share for the well-established businesses, and they're thinking about making a banking change? What are some of the key factors they should be thinking about?
I think a business really wants to understand the bank that they're talking to. Do they have experience in their industry?
Right.
Particularly if they're going to be looking for some credit, for
Right.
some loan products.
Right.
So I would ask them, do they bank other companies in their industry?
Oh, great
And what
question.
experience do they have? Another question I would ask is just asking the prospective banker about their background and their experience in the industry. And because that banker is going to be their advocate. They're going to be the one that's going to, lead the charge
Right.
for them. At the end of the day, when a bank is making a loan decision, it's a risk-based decision.
Right.
So if the banker or the bank doesn't have experience in their industry, they're going to view more risk, and that's going to factor into how they're thinking about that decision. Another thing I would encourage business owners to be asking is just simply understanding the relationship aspect of who's going to be their banker.
Right.
Once everything's settled, the dust settles, who's their contact?
Right.
And are you calling somebody direct, or are you calling a 1-800 number?
Oh, great point.
I'm not saying we don't have any 1-800 numbers here at the bank, but that is not our primary channel for customers to solve problems.
Yeah. There's not too many cell phones that start 1-800.
That's right. Exactly. And every one of my customers has my cell phone number.
That's
to
great.
your point. Yeah.
Those are just great points. For a new business, as you were talking about established business, I was thinking about a new business. And I think new businesses, and in the area of the bank that I lead, we see a lot of brand new businesses, especially in
Sure.
the micro segment. These are, these are baby businesses.
Yeah. Love it.
Yeah, and so it's so fun to hear some of the innovation and creative ideas that these folks who are starting really on a wing and a prayer in
Yeah.
many cases, and some of the questions I would share that they should be thinking about are number one, does your bank loan to brand new business entities? Because many banks don't.
Right.
Of course, from a risk standpoint, that's when a business is most risky, right?
Sure.
It's brand new.
Yeah.
So there are lots of type of products, namely through the Small Business Administration, SBA loans,
course, yeah.
that are terrific accessories to help financial institutions grant credit to these brand new businesses. But if I'm the business owner, I'm going to say, how many SBA loans do you
Yeah.
make? Where do you show up on the ranking,
Yeah.
which, by the way, is published?
Are you a PLP lender?
Are you a PLP lender? What does that stand for?
Yeah. Preferred lender program.
Got it.
So in the world of SBA, banks can become a PLP lender, and they can then make loans on a more fast-track basis with the SBA. And it just shows that they have a lot more experience in doing SBA loans. So
It means they know what they're doing.
knows what they're doing. You
Got
really
it.
want to be dealing with a PLP lender.
Good. And then how, if we can't do it through a traditional business loan, is there a way to do through a creative credit? Sometimes folks use equity in their homes. Sometimes
Sure.
they use other means to get credit to grow that business. And I think a bank that's able to be creative in that process has tremendous value for a brand new business. So we talked a little bit about FDIC insurance. That is a hot topic in today's financial world.
Sure.
If you were a business owner or some of your business owners, what would you encourage them to kind of understand? Or what are some options?
Yeah, you bet. We talked about looking at their deposit base and diversification. And within Zions, our deposits are spread over 9 states. which is really important.
Right.
And they're not concentrated in any particular industry. That's really important. You were talking about how during the Great Recession it was the loan side, and right now all the turmoil is on the deposit side. It's just a different aspect. And so I think that's really important. Now, I feel really fortunate that I work for a bank that has such a strong balance sheet, and feel really good about that. And I know most of our customers get very comfortable with that. But then there's some companies that they just want to have that added layer of protection with the FDIC insurance.
Sure.
The nice thing is we have a solution there. There's a product called Cedars, and there's a product called ICS Savings through something called the IntraFi Network, where customers can actually open up one account with the bank, and yet their money gets divvied up into $250,000 increments to get full FDIC coverage. So it's really a slick product to have, and then companies don't have to feel like they've got to go running all over town to try to get that full coverage.
So they have FDIC coverage of all of their deposits.
That's right.
Those deposits are spread out through the network of those banks. What a powerful product. And National Bank of Arizona and Zions offers that service to their customers. Oh, that's great. So that really provides the peace of mind. I mean, so your point being, number one, Zions and National Bank of Arizona are extremely strong financially, well capitalized among their peer group. I mean, I can go through all of the metrics.
Right.
Everything we're doing is to build a long-term stable company, but also we have the ability to provide customers FDIC insurance above the $250 because of the ICS and the Cedars program.
That's right.
That's great. So Tom, with your experience and everything that you've shared, kind of summarize, why would you choose a regional bank like National Bank of Arizona?
Brent, we've talked a lot about relationship and experience, and those things just really matter. Business owners understand relationships with their vendors, their suppliers.
Right.
And I would really encourage a business owner to think of their bank not just as a supplier, but somebody who's really a key part of their team. And the relationship aspect is huge. If you're working with a bank that understands your industry and they know what your goals are, they're going to help you get there quicker. They're going to help you achieve those goals.
Right.
And frankly, if we understand a company's business, sometimes a quick no is helpful too.
Right.
We're always looking for ways to say yes.
Right.
Sometimes we have to say no, or maybe we're going to say no, and we're going to try to find a different way to achieve the goal. Maybe it's not quite what the business owner had asked for, but we find a way to find a solution. And I think that's really important.
Those are some really great points. And I'll tell you, as you were talking, one of the other thoughts across my mind was fraud. Fraud is rampant in business today, especially with, we're always balancing the experience and delivery, ease of delivery with people trying to steal money.
Right.
The old days, it used to be you have to, do it physically. Not anymore.
We've got the fraud prevention products, and you really just need to have that in today's world. Unfortunately, with a lot of our customers, we kind of talk about it's not a matter of if, it's sort of a matter of when.
Right.
And so you really need to be looking into these things.
So as a tease, I'm glad we talked about this because banks, of course, spend a lot of time thinking about how to avoid it, how to protect their customers. And in fact, it's so important. It's the subject of our next episode on Financial Sense. So I'm looking forward to delving into that. So Tom, kind of to put a bow on this episode, to wrap it up, what would be one final thought you would leave with, you'd like to leave with the business owners and viewers of this episode?
You know what? Know your banker. This is a relationship. Our whole lives are built around relationships, and your bank should be no different. Know who your banker is.
That's great, Tom. So I want to thank Tom for joining us for this episode of Financial Sense.
My pleasure. Great to be here.
So that'll do it for this episode of Financial Sense. Make sure to like and subscribe on your favorite podcasting platform or YouTube.